Alright, so it's day 2 right now. Day 2 was supposed to be for yesterday. But something was happening on my phone. I think the amount of videos I was uploading or like recording on my phone, it kind of made it lag out. It went to full capacity. Yeah, and we're also starting this day a little bit late. I'm starting it at 11 a.m. I gotta work on really figuring out how to wake up like consistently every day at 6:45. I know my future self is gonna be looking at me right now and saying, like, you know, I'm a B or whatever, but yeah, I gotta figure out a way to really get consistent with that. Yeah, but yeah, right now we're gonna be learning continue learning some technical analysis indicators, baby pips. Right now I'm on elementary. So with baby pips there's like 12 courses, and it goes with school, so it's like preschool, kindergarten, then elementary, and we keep going until college or university. So right now I'm on elementary, and elementary, the last course of elementary is the technical analysis indicators, and then after that I'm gonna be heading into middle school, which will be the how to chart these indicators and spot patterns. Yeah, so I'm gonna show you guys right now all that I've gone through with baby pips, and then yeah, when I get into the work session. All right, so baby pips, I have gone through all this right here. So this is what I learned already, the basics. Like when to trade forex, who trades forex, why trade forex, all these type of basic things. Margin trading, which is definitely a basic thing as well. All the fundamentals. Yeah, then the brokers, the 3 types of analysis, the types of charts. Now I'm on elementary, and this is what I've already learned. Support and resistance, Japanese candlesticks, Fibonacci, moving averages. And right now I'm on the popular chart indicators. So yeah. All right, so I'm gonna let some instance real quick. No, but I start. I get the coffee in the hand. Everything's still. But let's start. All right. Let's get into it now. Everything's going right now. Yeah. But let's start now.
Round 1. $19 more minutes until I'm done block A, right?
before I even started blocking, as you've seen, I drank coffee, bro. Like an hour later on, like an hour and like 40 something minutes later on, I'm tired. I'm like, how does that make any sense? I'm bobbing, falling asleep. But what's going on? What's going on? Whole time I was making my coffee wrong. Bro, that sucks. No wonder I kept falling asleep, bro. Making my coffee wrong the whole time. But I just got some new one right here, and let's see if I made it right. I think I made it right. Yep, this is right. Oh yeah, way stronger now. I was making it wrong the whole time. Since I've gotten it, I was making it wrong. This is the first time I made it right. So yeah, we're finna get some work done for real now. Alright, so just finished block A. Yeah, block A. I just learned a couple of indicators, a couple more indicators from yesterday. Well, actually two of them. Two of them being the ADX, which is the average directional index, and the IKH, which is like Ichimoku Kinko Hayo. I don't know to say properly, but yeah, I'm gonna just say IKH. So with the ADX, or the average directional index, excuse me, it tells you, or it signals when a trend is strong, or if a trend is strengthening, or if a trend is weakening. It also, it's on a chart that is between yes, I think 0 to 100, if I'm not mistaken. Yeah, 0 to 100. So with this chart, it kind of says that, or shows you that if price is below 20, then the trend is very, very weak. If the price is if the price is between 20 and 40, that means the trend is strong. If price is above 50 or above 40, above 40 to 50, that means price is continuing, or the trend is continuing to strengthen. So let's say, oh, also with this indicator, it doesn't tell you if the trend is bearish or if it's bullish. It only tells you if the trend is strong or weak, or if the trend is also strengthening. So example, let's say you're in a downtrend right now. You don't know if this downtrend is strong or weak. So you pull up your ADX. Your ADX shows that price right now is in between, let's say 20 and 40. This tells you that yes, this trend right now is strong and you are able to get in on that trend. But let's say it's in a downtrend right now, and let's say price is below 20 and it's ranging. It's showing on the ADX that it's ranging. This signifies that the trend is weak and you should not get in on that trend. So basically what this indicator is, as I said before, if price is between 20 and 40, this trend is strong. If it's above 40, that means the trend is continuing to be strong and it's continuing to strengthen. If price is below 20, that means price is very, very weak and you shouldn't get in on that trend. So that is what EDX is. I'm gonna show you how it looks on the chart. And yeah, hold on. All right, so right now, I'm gonna go 1 hour chart. So right now over here, if let's say right now price is on an uptrend. I don't know how strong price is right now, right? So what I'm gonna do is I'm gonna pull up my ADX, my average directional index. I see that price is right now, price is at below 20. It's below 20. Let's just say that. So I would say, you know what, I am not gonna get in on this trend because this trend is pretty weak. I'm not gonna get in yet until I see price get above 20. That's the only time I'll get in. So let's see over here. Let's see. Okay, let's right there. So I would get in right here because I'm seeing that price is pretty strong and it's getting above, it's above 20. So let's look at the chart as well. Remember I said before, it doesn't show if the if price is bearish or bullish. So right here, right here, price is above 20, which is on this kind of stick right here. So I'm seeing it as bearish. It's bearish right now. And look, since it's on a 1 hour time frame, which is right here, which is on this candlestick right here, look how much it draws down. So it kind of shows you that, yeah, price is strong for this bearish trend. Let me go pull it up on the, let's say 15 minute mark here, right here. All right, perfect. Look, so on the ADX, it shows that price is strong. It's really strong because it's at, see, it's at 40 right now. So I'd get in right here. I will put my stop loss. Let's just put it just to put it. I will put my play right here, whatever. Let's put a low, whatever. Let's say put it all the way down here. Let's just say this is a 1 to 10 risk to reward ratio. So yeah, it just shows you whether the trend is strong or if it's weak. If it's weak, you don't get in. If it's strong, you do get in. So yeah, that's what it shows you. All right, now with the next indicator, which is a IKH, I was very confused when it came to this one. There's a lot of lines on this chart, but I will try to explain to the best of my abilities. With this indicator, it shows you the support and resistance. It also shows you the, what else? What does it show you? It shows you how, if the price is trending, how much is trending, the strength of the trend. Yeah. I don't really know how to explain this one properly yet, but there are a bunch of lines on the chart. Some of the lines show the last 26 periods of the price. Some of them show the last 9 periods. Some of them show the last 28 periods and such. But with all of them combined, it shows you whether a price is ranging. It shows you support and resistance of the price, and it shows you if you should get in or get out. I'm gonna be honest. I don't think I'll be using this indicator ever, but yeah, this indicator is mainly traded on JPY. Although it can be traded on other pairs as well, it's mainly traded on JPY. I'm gonna show you how it looks. It's confusing. This is what I mean. It's just a bunch of lines like this. Yeah. What I got from it is that, as I said before, it shows support and resistance. It shows where the market is on a downtrend. It shows if market is on an uptrend. It can show you when you can get in, when you should buy, and all these types of things. The thing that I just don't understand about it is just with all these lines on the chart, it gets kind of confusing. That's honestly it. If I'm being honest, it's just I feel like I have to put more work into learning it, and if I did, then I'll maybe like it a lot. And so I'll try putting in a little more effort to understand. It's just that it's kind of confusing and kind of overwhelming when you see a bunch of lines on the chart, you know. And honestly, I don't think you need all these lines on a chart. Although it's like a specific indicator, I don't think it's okay to be using all these lines on the chart. You can't even see the candlesticks properly. Oh yeah. What I also learned is that instead of you only using one indicator to signal if you should buy or sell, you should conjoin multiple indicators, like 2 or 3. And if all 3 are telling you one thing, then it kind of strengthens the signal. So let's say your RSI is saying price is overbought, and let's say your MACD is saying the same thing. Let's say MACD is showing going to go to a downtrend. That kind of tells you should place a sell, you know. So instead of using one indicator to signal if you should buy or sell, or signal to where prices may go, you should use 2. And if 2 of them are saying the exact same thing, that kind of strengthens what you should do, or where price is going to be going. What I also learned was the best technical analysis indicator, which is none of them. None of them are the best. None of them are the best indicator, but it's best to use multiple of them conjoined into one, which can help you, as I said before. But the ones that are mostly used by traders is MACD, parabolic SAR, stochastic RSI, and Bollinger Bands, and yeah, moving averages, of course. So yeah. All right, so I just finished elementary for baby pips. Now I'm on to middle school. Yeah, middle school. All right, so I'm gonna take a little break. I'm gonna go do something real quick, come back, and then we're gonna get into work block B. So yeah, I'm gonna be back in like 30 minutes. I gotta go do something real quickly. Confirmation that I did 2 hours. Here it is right here. I had a timer right here. Let's reset what it says. 2 hours. So for confirmation, you know, I did 2 hours. And yeah. Alright, I'll be right back. Alright, just got back. So I'm gonna start work block B now. So yeah, work block B is middle school course for baby pips. It's from grade 6 to grade 8. So grade 6, we're going to be learning about oscillators and momentum indicators. All right, so yeah, work block B. Let's get into it. Yeah.
Round 2.
so just finished work block B. So as I was doing work block B, what I learned, well, some of the stuff that I learned was, I'm gonna just show you instead. What I learned: the leading versus lagging indicators all the way down to what I learned. So first off, leading and lagging indicators. So I'm gonna kind of break it down in two different titles. Leading indicators are indicators that allow you to see the trend before it happens. Lagging indicators that are indicators that allow you to see the trend after it happens. Is they are trend following indicators. So a example of a trend leading indicator is oscillators. Oscillators allow you to see when prices are going to reverse. And lagging indicators are ones that are trend following. So they allow you to see prices. When prices go down and it sees that prices are going down, that's when it kind of tells you or it shows you that price is reversing. An example of a leading indicator is I would say RSI. Yeah, RSI. All those indicators that range from, like, let's say 0 to 100, that kind of tells you if price is overbought or oversold, is an indicator. That's a leading indicator, because obviously if price is oversold and it's shown that's oversold, then that's an indicator or a signal that price will reverse and become a buy or a bullish market, right? So yeah, and obviously if price is being overbought, that's a good signal that price will then become a bearish market. So yeah, examples of those are parabolic SAR. Well, parabolic SAR doesn't really range between a chart, but you do stochastic, the RSI, and yeah, those indicators that are oscillators, those ones are leading trade leading indicators. Yeah. And for now with lagging indicators, an example of a lagging indicator would be MACD and moving averages, or it could be GMMA, moving average ribbons, anything like that, because those give you the signal of a trend happening, or that a trend has occurred after the trend has already started. So yeah, those are the slower indicators, lagging indicators. Yeah. Yeah, that's about it. So there's lagging indicator and leading indicator. Again, leading indicator shows you the trend before it happens. Lagging indicator shows you the trend after it happens. With both of them, there are flaws. With leading indicator, there could be spikes in the market that says a price is gonna do this, but it's actually a fake out, and it's the opposite. With a lagging indicator, you're obviously gonna get into the trend later than when it started. Let's say it started here, you're gonna get in here because the lagging indicator is slower. And let's say you get in later on, you could lose, like, you could miss out on let's say 50 pips, because instead of you getting here when the trend has started, you got in here instead. So yeah, that's the differences between a lagging and a leading indicator. Next thing I learned, right now I'm learning different chart patterns. And what I mean by that is there are specific, or let's say specific drawings on the chart that signify something. Um, right now I learned the double top and a double bottom. So with double top, it's when price is going up, and then it hits, like, let's say a resistance, and then it retraces back down, and it hits that resistance again. That right there is called a double top. When price hits the resistance, comes back down, traces a little bit, and hits it again, then retraces back down. When it retraces back down the second time, um, you then place a sell signal on that, because it's showing that price price is respecting that resistance, and since it's respecting that resistance, it'll most likely come back down. That's one of the patterns I learned. I'm gonna show it to you right now. Right. This right here is what I mean. This is a double top, and with a double bottom is the opposite of a double top, which is this right here. So what I mean by it hitting resistance and respecting resistance is this: it goes up, it stops here, resistance is right here, it draws back down a little bit, or yeah, draws back down, and then it goes back up again, respects that same resistance line, and then comes back down. And then you would enter on the neckline. The neckline is the bottom of the double top. Double top, which is the bottom right here. And then you would enter a trade right here and try targeting the bottom of the formation, the bottom of the formation of the double top. Yeah. Let me see if we can show you down the chart. Alright, so that one right here. Double top. Price went up. It resisted right here, came back down, draw down, came and tested it again and drawed back down. Well, what it says on pt pips is it's supposed to enter in the neckline. The neckline is right here, and it's supposed to target the formation, which is this right here, or of the double top. But price didn't draw back down here. Yeah. What I was saying, I was supposed to come back down to here, and you were supposed to try to target this area right here. But that's not what happened here. But this is what a double top is. And a double bottom is the opposite of this. Yeah. Right, next one is a head and shoulders. A head and shoulders is a formation where price is in an uptrend, and price moves up, creates a peak, draws back down, and goes up, creates a higher peak, draws back down, and goes up and creates a lower peak than the higher peak. So right there is a head and shoulders. This is a formation that kind of tells you, or does tell you, that price is respecting the top, and it will form a reversal, or a reversal is soon to occur. And this is how it looks right here. Price went up, created a peak, drawed back down, went up again, created a higher peak, drawed back down, and went up again, creating a lower peak than the higher peak. And this right here is a neckline. It's basically connecting the lowest point of this shoulder to the lowest point of the next shoulder. And what you would do is for a trade to happen, let's say for a sell, you would enter a trade below the neckline, targeting right here, targeting the formation of the head and shoulders. So I would try to target down here, right here. And it's the same thing for a reverse head and shoulders. Everything will be flipped upside down, but instead it would be a formation of a higher shoulder, or a higher peak with a not a peak, a higher valley with a lower valley. So it would be higher valley, then lower valley, then higher valley. That would be a inverse head and shoulders. And how it looks is like this right here. A higher valley, the lower valley, with a lower valley, with a higher valley right here, with a higher valley, with the neckline right here, and then you would enter right here, targeting here. Yeah. Well, that is what I learned for work block B. I'm gonna make myself some coffee again. I'm getting a little bit tired, and we are going to head into work block C. So yeah, I'm gonna get my coffee, take a little, put a 5-10 minute break, come back, then we're gonna get into work block B. Work block C. Yeah. So just to confirm again, this is how many hours I just did. Hold on. Timer right here. Reset. 2 hours and 58 seconds. So that is how much I just did for work block B. So I'm gonna be doing the same thing for work block C as well. Yeah, so I'm gonna see you guys for work block C. All right, now about to do work block C. Yeah, we'll be learning some wedge chart patterns, more chart patterns, honestly. Yeah, let's get into it.
Round 3.
So for work block C, I could not finish it. It's not that I'm tired or anything. I just have to go do something right now, and I didn't have enough time to finish it. I was gonna go do 1 hour, but I only ended up doing 30 minutes. So for day 2, we ended off with 4 hours and 30 minutes. That's a 1 hour difference from yesterday, if I'm not mistaken. Well, yeah. As I said before, I'm not gonna lie and say, oh, I did 9 hours, I did 8 hours, I did this and this and that. I'm gonna be honest with you. I only did 4 hours and 30 minutes today. As I said, it's a process. I'm not gonna fake it and say I've been doing this for the whole day. I've been waking from 6:45 in the morning to 9 o'clock at night. No, I have not been doing that. As I said, I know it's a process. I'm not gonna fake it. I know it's a struggle sometimes. I know I gotta build. I'm not gonna just wake up one day and say, you know what, I'm gonna do 9 hours every single day. It's a process, you know. So, of course, it's not an excuse or anything. I'm gonna still give myself the push-ups because I didn't wake up on time today. I was supposed to wake up at 6:45, but I woke up at 11. Yeah. So I'm obviously gonna give myself some push-ups to do. I'm gonna record those push-ups so you guys can see that I did give myself a consequence for me not being able to hit at least 6 hours today. I didn't wake up on time today, so I'm gonna give myself those consequences. Yeah. But yeah, nonetheless, I'm not gonna lie to you. I'm not gonna lie to my future self, because my future self knows what I did and what I did not do. But I'm obviously not gonna lie to the people that watch this in the future as well. I was not able to do what I wanted to do today. I didn't wake up on time, as I said before, and I didn't get to do my full all my work blocks. I was supposed to do like 4 or 5 today, but I only ended up doing 2.5. So yeah, I'm gonna go hit those push-ups. So let's see. Since I didn't wake up at 6:45 today and I woke up at 11 instead, I'm gonna do. Okay, so I'm gonna do 40 push-ups. 40 push-ups. 10. So 10 push-ups for each hour. So let's say 6 to 6:45. That's just kind of 7, 8, 9, 10, 11. So 4 hours. So that's 40 push-ups right there. Okay. since I didn't wake up on time. Yeah, so I'm gonna go do those right now. I'm gonna record them. I'm gonna come back to you, and then I'm gonna do the outro. So yeah. All right, so I just did the 40 push-ups, and I'm not doing the 40 push-ups because, let's say, I only woke up late. I did those 40 push-ups because I knew I could have woke up at 6:45. I seen the alarm, and I said, you know what? No, I'm gonna go back to sleep. So instead of me just giving myself a consequence because, let's say, I didn't wake up on time, I know that's not the full issue, you know. Because me not waking up on time delayed my work session, which allowed me to not be able to finish on time, and which allowed me to not be able to get the number of amount of hours I wanted to do today. I was supposed to do 5 work sessions. I was supposed to get 9 hours in today. My goal was to get 9 hours in, but since I woke up late, that delayed everything. My me being, let's say, irresponsible, me being like not hard on myself, not knowing what I want to do in life, delayed myself from getting 9 hours in today. And I know that if I'm able to get 9 hours a day consistently for, let's say, a year or 2 years, I know that I can get to where I want to get to way faster than me just doing 4 hours. So I'm delaying my process. I'm kind of self-sabotaging myself. So instead of me saying, okay, no, I'm gonna just do 40 pushes, my 40 pushes because I woke up late. That's what I'm doing, you know, because I know I'm delaying my process and I'm delaying the life that I want for myself and for my future family, you know, and for my family right now. So yeah. Nonetheless, I know it's a process and I know it's gonna be hard. I'm not gonna, as I said before, I'm not gonna wake up one day and just say, yeah, I want to become successful. I'm gonna do this, I'm gonna do that. I know that's not how it works. But as long as I know I'm not gonna quit, and as long as I know I'm gonna get up each day and try over and over and over again, then I know I'm gonna get to where I want to get to, with time, with patience, and with discipline, and with consistency. So yeah, that's gonna be the end of day 2. Although we didn't do the amount of work sessions that we wanted to do today, I'm gonna just try to do that tomorrow. So yeah, but tomorrow I got work tomorrow, and I finish at like 5:45. So I'm gonna be getting in like 5 hours. My goal for tomorrow is 5 hours. So yeah, I'm gonna see you guys tomorrow, and then yeah, tomorrow.